just a little bit about myself. I've been doing mortgage broking for last 8 years. In my dreams, I did become a mortgage broker in 2011, but it took me good 5 years to actually be a mortgage broker and start my journey. Same like for most of the people, they start dreaming of a property very early, but we spend a lot of time just thinking about it that we want to get into the property. Similar to my journey, because I just didn't get the courage that I can do it. So all of you can do it. It's a good start that we are sitting here and thinking about the property. That's myself, and that's my family, my husband and my 2 little kids. My daughter has been mortgage broker since I was pregnant, because I was studying to be a mortgage broker while she was there. So she knows most of the stuff, what to do. She's my marketing company, and she thinks it's simple to be a mortgage broker. I just pick up the call and things get done. Recently we've received, so I've put down some of my awards. This year we've been awarded as a winner for the Excellence in the Customer Service Victoria-wide. And I'm a platinum broker with my aggregator and with most of the lenders. So what it means is, if you go to a mortgage broker, your loan gets approved in a week or 2 weeks, we can get your loan approved in 24 hours. In some of our clients' reviews that are put in, there's over 100 reviews on the Facebook and on Google, and they're all real stories how we get the things happen. So today we're going to talk about the purchase process, your step-by-step guide in terms of how it works in terms of borrowing. So the first important step when we start thinking of buying a property is, how much deposit do you have? If you think how much you can borrow but you don't have any money, there is not much we can do, because we do need a little bit of deposit. So it is very important to know how much deposit do you have, how much savings do you have. Even if we have the saving, how much out of that saving we want to put towards the deposit is also very important. Again, what is your borrowing capacity? What is your credit score? If you don't know your credit score, it is also very important to discuss with your mortgage broker what your credit score is and how much existing debts you have. What are the credit cards, buy now, pay later, save, all those kind of things, everything get included into your existing debts. When we buy a house, the very important thing that a lot of people don't know about is the genuine saving. If you're buying a property, especially if you're going up to 95% of the purchase price, banks would like to see 5% genuine saving saved by yourself. It can be 3 months old money, or it can be accumulated over 3 months, over the last 3 months. Depending on lender to lender, every bank thinks differently how they want to check what your genuine saving is. There are few ways the genuine saving is held. I know I talk too fast, and if it is too fast, let me know, I'll slow down. But I know a lot of people complain that I talk very fast. And I'm telling myself, slow down, slow down. So the genuine saving can be held in your bank account over 90 days. It can be in the form of shares or crypto. We can literally provide the statement of your shares if it's 3 months older. The funds in your overseas bank account. If you have an existing residential property, that can also be considered as a genuine saving. There is government approved first home buyers scheme, first homeowner scheme, where you can save money. It is also considered to be genuine saving. Your tax refund, or if you've sold a real estate asset, or even if you have sold a car, that is also considered to be a genuine saving. Finance pre-approval. A lot of people come to me and they ask me one question, and I think some of you must have done it today as well. Kiran, what is the best interest rate? Yes, as a mortgage broker, it is our job to get you the best interest rate, definitely. But in my opinion, this is not the correct question. For me, before the interest rate comes in, if you don't have the 20% deposit available, the most important thing for me is mortgage insurance. How can you save mortgage insurance, right? I was just talking to a client, and he explained me his picture, and I said, you could have paid extra $2,000 to save $10,000 in the mortgage insurance, because if it's a 5% or 10% or 12% deposit, the mortgage insurance amount changes. So whenever you're discussing the home loans, it's very important to consider what is the mortgage insurance that we are going to pay. Loan features, offset, redraw, what is that product giving you? Is there a flexibility to make weekly repayments? What are the flexibilities available? Those things are important to check. Government schemes. If you are first home buyer, it is very important to know what are the government initiatives available. As of 1st of July, if you are permanent resident, you are able to buy up to 95% of the purchase price without paying a mortgage insurance, because they are bringing it out for the permanent resident as well. However, there is an eligibility criteria. Discuss to your mortgage broker or myself. The documents. The main documents that you need for the pre-approval are these documents: your proof of income, your pay slip, or any form of your bank statement that can prove your income as well. Identification, your driving license, your passport, and if you're not Australian citizen, then copy of your visa as well. If you're on 491 visa or other visas, there are some visas also allow you to buy property in Australia with different terms and conditions, different stamp duty, of course. If you are self-employed, your financials are required. If you're self-employed, some of the lenders may ask for 2 years financial. However, in the current year times, 1 year financials are enough for you to secure a loan, as well as your bank statement of where the salary comes in, where all the money is held, where your saving is, or where your expenses are cut. We need all your bank statements. One more important thing to know here is a lot of the times we send 5,000 there, 5,000 here, 10,000 over there. When you're doing a home loan process, going through the home loan journey, avoid those transactions, because banks, anything over $5,000 you're doing here and there, they can come back and ask, where are you spending this money? Not necessarily, some banks don't ask for bank statement, but it is good to be mindful of those things. Once your pre-approval is done, obviously your property journey starts. You start searching for your property. Your mortgage broker, your bank can provide you a property report. As a first-time buyer, when you enter into the market, we don't know how much to offer. We don't know if it is too much or we don't know if it's too less. So if you think this property is for 700, it might be 800 and you're offering 700, and every time you think, why am I missing on the properties? Why I'm not getting the property? You know, every time property comes in, somebody else wins. Discuss with your mortgage broker. Get a property report. That property reports show you a maiden price in that area, what the expected range is. It also shows how much the properties are being sold in that area and what are the other properties available here. It also shows you around school and what else is present in the property report. Once the property is purchased, make sure you engage a solicitor or a conveyancer. They are the one who take care of all the legal paperwork for you. I can't read it. I can't read the contract for you. You cannot read the contract. There could be some terms and conditions. And when I talk about the contract, it is not always about negotiation of the price. There could be negotiation of terms. There might be a term that we don't like and we want to discuss and negotiate that term. So it is very important that you, and the other thing is you're going to pay them regardless. So you better have them from the start. Yeah.
In the previous slide, so what is the normal, if it is approved until what time? What is the time until which you need to buy the property from the date of approval?
Generally it's 90 days. However, with some of the lenders, they just provide the payslip and get another 90 days as well.
Okay, so 90 days.
Yeah. It depends. Every lender have different policies and stuff. Once the property is purchased, you will send the contract to your conveyancer and your mortgage broker, and the property valuation is organized. It is also very important that you get the insurance for your property. A lot of people don't want to pay for the insurance because settlements after 30 days or 60 days, but I always recommend make sure you have the insurance for the property because it is a very gray area. If the contract has become unconditional, something happens to the property, who is responsible? So it is always very important factor to make sure that you have insurance to cover your property for that period of time. Like we discussed, once bank is given you the unconditional approval. What unconditional approval means? There is no condition left. We've done the valuation, we've got the property. If bank requested for any additional document, as in the credit card should be closed or whatever, all the conditions are met, and now we have an unconditional approval. Once the unconditional approval is done, you will be issued the loan documents. Some banks issue the loan documents via e-docs, easy job done. However, some banks are still doing the paper form. If you are sent the paper form, they want the original documents back. So we want to make sure there's enough time period allowed in between for that process to happen. Once the loan is done, document is done, there are important things to remember. Your settlement date. When is the settlement coming? If you don't know your settlement date, you might be renting right now. You might have to give the notice to leave current property. You might have to book people to take your stuff. So some little important things many people miss. So those are very important things as well. Final inspection. So before the property you settles, sometimes you organize a final inspection. You want to check what's happening in the property. Make sure you set up those dates. And for the final day, for the settlement date, you want to make sure there are funds, the shortfall of funds. So let's say If you were meant to put 100,000, you put 50,000 deposit, and the 50,000 is for the day of the settlement. Make sure you talk to your solicitor and broker. Your money is held in the account. Otherwise, I tell you, you will be running around on the day of the settlement to make sure those funds get transferred on the same day. And sometimes it's big transaction, you can't do it online. Your banks can't do it, so make sure you are ready for the day of the settlement. So the loan is not a set and forget thing. A lot of people, yes, as a mortgage broker, we're gonna set up your loan at a very good level that it's working very well. But if you set and forget, we don't know, we can't check your bank account, we don't know what your interest rate is. So make sure you're always keeping an eye on your interest rate, talking to your mortgage broker. As a mortgage broker, we can go to the bank and we can negotiate for you. If you say, Kiran, my interest rate is going up, this is what's happening, we can always go back and negotiate, but only if you tell us. I send emails every 6 months to all my clients, what is your interest rate? If you don't get back to me, I can't do anything because I cannot log into your bank account to check. So do not set and forget. Make sure you're checking your loan amount, your loan account, and see what is happening. Make sure you check up your direct debits are set up properly, and make sure if you got an offset account, it is linked. You could have an offset account or a redraw, they work differently. It is always great to have an offset account. Even though you have the offset account, make sure after the settlement you check that the offset is linked to your loan so that you're saving money. Make additional payments to accelerate your loan is being paid off sooner. So instead of paying monthly, if you pay weekly, obviously you're paying sooner than paying monthly. Regularly review your loan structure and stay in touch with your mortgage broker. The last one is the collect the keys and move in, because we've got the house now. If any questions, I know I've kept it very, very quicker, but if there's any question, feel free to ask me.
Two quick questions. First thing is, you said in the first slide, loan will be approved in 24 hours. Right? You said loan will be approved in 24 hours?
It can be, yep.
It can be. Like, how is that possible? Because we have seen like big fours or big banks take at least 3 to 4 weeks.
So the banks have the category of brokers, yeah. So they've got a platinum broker, a gold broker, and a flame broker. The reason why I said I can get it approved in 24 hours, I'm a platinum broker, and if I'm not gonna say all of you will get it, but if we need to get it, we will.
Everything is fine.
Not everything is fine. I'm not gonna push them because everything is fine. It's because, let's say you come to me today, something happened, your finance is due tomorrow, and we have to make sure it's approved by tomorrow. Then obviously, we'll escalate and we'll get them to turn it sooner.
Are you talking about big banks here? Like
Big banks. I submitted an application on NAB on Wednesday. I came here on Thursday. Loan was approved on Thursday. Friday, loan documents were signed, and Monday is the settlement.
Okay.
If it is needed, it can be done.
And second thing is, you mentioned about LMI, no need to pay LMI at 95% LVR.
Correct.
How can you explain that?
So there is a government initiative, government scheme.
Are you talking about Victoria government?
It is all over.
All over
Yeah.
Australia?
Yeah.
Is there a cap on that?
There's a cap. There's a cap. So there's a postcode cap. So depending upon where you buy. You can come and see me, and I can do the research which area you're looking, how much maximum you can go for.
Can you elaborate on the settlement slide once again? Especially how neutral party stands.
Yeah. So if your settlement is after 30 days, before you leave, if we have the time, I'm happy to present another slide how to buy property in superannuation if we got the time. So in case you're planning to leave. So if the settlement is in a week time and you have to pay funds from yourself, there's two ways you can do it. One, you can put it in your solicitor's account, in the PAXA account. So PAXA is a platform which gets used all over Australia for settlements. You can put in the PAXA so that on the last day you're not running around, or you have given your bank an authority to deduct on the day of the settlement. So make sure your money is sitting, if the settlement is with NAB and you've given the shortfall account as a NAB, make sure your money is sitting in the NAB, not in ANZ.
You said about having insurances before settlement. Can you please elaborate why? The technically property is not yours.
Correct. I'm not an insurance broker, but I'm gonna say this. This is a very gray area. Once the contract become unconditional, who owns the property? Technically it's yours because there's no going back.
Right.
I have not come across a situation, but every time I've spoken to the people, insurances, everybody says it's a gray area. It's only 30 to 60 days. You might as well.
Gray area, what can happen to that property?
What if the house get burnt? Who is responsible? Because the contract's unconditional, property is yours.
It's like, I don't think bank will even give you loan if it doesn't have a insurance policy. So
From the day of the ceremony, you definitely need the insurance.
Yes,
Definitely.
settlement is fine, but
Yeah,
that-
before if the house gets burnt, who's responsible?
You have an insurable interest in the property, and that's why you should take the insurance once it becomes unconditional.
Somebody from the specifically from the insurance, they can definitely guide you on that. I don't want to make too many comments, but as far as my knowledge, whenever I speak to insurance brokers and everything, they always say this is a gray area. It's better you cover yourself. And if you're going by a mortgage broker and they refer you to an insurance company, as a mortgage broker, we only refer to one company, it's Alliance. And if we do refer you to Alliance, of course they are expensive, but you're covered for that period without paying.
Thank you.
Is the conveyancer same as solicitor, or like suppose we are looking for?
I'm sorry, what were you
Is
saying?
the conveyancer same as solicitor?
So conveyancer is not a solicitor. Solicitor is obviously lawyer, a legal representative. Conveyancers are the one that they only deal with the property settlements. If there is ever a problem in the transaction, then solicitor is better, but conveyancers
Can
settles.
still do
Yeah. In most of the states these days, conveyancers are properties. Yeah. And they charge you less. So what was your question?
Yeah, once we get the pre-approval, like suppose if you're looking at property, like, will it be based on the state where we are trying to buy or like?
Sorry, I didn't understand. Sorry.
See, once we get a pre-approval, we will get a approval for a certain amount.
No, you can buy in any state.
Any state.
No problem. Yeah. Yeah.
Can you just focus a little bit on the requirements for the first home buyers? Like the schemes or anything you have got in mind?
What sort of
The
schemes?
eligibility or what are the because-
So for the first home buyer scheme that I was talking about, if you are a first home buyer and you are a couple, your income should be less than 200K. If you are single, that your income, less than 200K and then 125 single.
And what would be the range in which we can buy? Depends on this.
Depends on the postcode. Yeah. I'm happy to do a research for you postcode if you come see me, and I'll send you a link. You can search yourself.
So is this scheme eligible for foreign visa holders as well, like student visa?
No,
Just PR?
just PR. As of now, only citizens. As of 1st of July, PR also is eligible. Unfortunately, there is no scheme for students
Which
or
scheme is it?
non-residents.
Which scheme are you talking
It's called
about?
FHB, first home buyer, first home guarantee.
Is that income should be less than 20K?
Less than 200K for a family, 125 for single.
And if exceed about that amount, then
If you go above that amount, then you're not eligible.
not.
Then government think you got too much money, you don't need to say otherwise. It goes by the last year. So if you're going in the scheme from next year, they're gonna ask you for the notice of assessment as of 30th of June. So even though your income goes up next year, but because they go by notice of assessment, so technically it's gonna be what in the present year. And if you're a citizen, you're getting it now, they're gonna ask for the notice of assessment for last year.
There is nothing changing from this year to year except for PR. The people who are PR can apply. or
Correct.
they-
In New South Wales, if you're buying a property up to 800K, you can go without stamp duty, and up to 1 million, it is pro rata basis. Correct. And I've got a local solicitor if anybody wanna ask a question in terms of that, because I can't answer the legal questions.
Was there any question?
I think so far I managed to answer. But if anybody got any legal questions in terms of property, she's here.
Because for every state, the stamp duty and everything is changing all the time. I think in Victoria it's a change.
It's
as
still,
well.
for now it's still 600.
Yeah,
Yeah.
because from 1st of July, it's gonna change it to 800,000, so no stamp duty. And also the land tax option is they are going to remove it for the first home buyers.
Sorry, what do you mean by no stamp duty for under 800,000?
800,000 worth of property if you're buying and you're a first home buyer. So they are subject to all the conditions. So we can discuss it afterwards. But that's the norm. After 800,000, there will be a stamp duty. Right now, the thing is up to 1.5, you can waive off the stamp duty. I wouldn't say waive off, but you can channelize it as per the land tax, which is called as a property tax.
Is there an income limit on this 800K?
No, there's no income.
Can you say that now?
Thank you.
Like a cap?
Okay.
Every year it's gonna be changed, if you have opted for that, option. But there are some people, they want to, still pay the stamp duty. Because if you're not holding the property for more than 5 years, then that's worth it. Otherwise, it's gonna go up every year, and nobody knows how the property prices are going up, because there is a component whenever they calculate the property tax, whereby if the property price is more, you will be paying more property tax every year.
Okay.
There is a calculator on LRS website. It's worth going there, and you can weigh it up how you can do it.
You can come see me. I'll send you the link of the calculator as well.
Yeah.
We've got about 15 minutes. Are you happy to go through how to buy property in superannuation? Perfect.
Can we be first time buyer in every state?
You wish. I'd definitely love that actually.
Yeah, that's a good option to give to the government.
Yeah. That was the best question actually. So, and get to see all the states. I've given you all of this. I've put down all the steps how to buy property under superannuation, but we'll go through quickly on this as well, because I feel like for some reason we are missing on doing something in our superannuation. So first of all, if you want to buy property in superannuation, you need to have at least 30%. So if you've got 90,000 sitting in your superannuation, you can buy property for up to 300K. So 20% for the deposit, 5% for the stamp duty, and 5% buffer in one day if the contribution is not coming from the employer or there's no rental income coming. So 4 important things to know. The property that you buy in superannuation, you cannot buy a land and hold. The property should be income producing property. So from day one, you get the keys of the property. That property should be able to rentable, should bring you money. You can buy.
So you were saying 90,000, right? Like, is it a family income?
No, so
I mean, in the super?
it can be family, it can be individual. So
Minimum should be 90K.
no. So there is no minimum. What I'm meant to say is, if you're buying property for 300K, you should have at least 90K. So whatever the purchase price is, 30% should be.
But there are
In a very simple language.
There are some minimum cap. For example, you have 100K, right? So you're gone, right? You spend 90K in buying, you're just left 10K.
What are you gonna do with the 10K? You already bought a property. You just sit on
So there
the.
is some minimum cap. You have to have debt and balance even after you buy a property.
If you ask a financial planner, yes, it's a 250K cap. But if you ask a mortgage broker, no. You can buy a property. My client had bought a property for about 250K. He had something 75K or something. He put some contribution, saved money on the tax, and he did it. So if you tell your financial planner, I know it can work and I want to buy a property, they will set up for you. They will not advise you. As per the compliance, they can't. Financial planner friend told me. You can buy a residential property or commercial property. So the tenant must be at arm's length. You cannot give it to your daughter, to your son, or to a family member to rent out the property. It has to be the third party. However, if you run a business and you wanna buy a shop under your SMSF, you can rent out that shop to your business. So there are 3 critical processes that we need to know. The first one is the advice process. In the advice process, you need to obtain an independent legal and tax advice. As we said, that you have to speak to your financial planner. You have to set up SMSF, self-managed super fund. However, the property is not purchased in the SMSF. The property is purchased in the Bear Trust. So you have to set up a Bear Trust, and one Bear Trust can hold only one property. It cannot hold 2 property because you're buying the property under superannuation. It is a highly compliant area, so they will not. So anything happens to one property, they can't go against the second property because there's a separate trust set up for each property. So you set up the SMSF, the funds get rolled over to your bank account, SMSF bank account, you set up the Bear Trust, and then you start looking for the property. So the second step in the purchase is you locate the suitable investment property, you set up the Bear Trust, you buy the property, exchange the contracts, and you do not pay deposit from your pocket. All the expenses, savings, all the expenses or anything else, the deposit, all comes out of the SMSF money. And then comes the funding process. your SMSF or you do not apply the loan, it is your bare trust that's borrowing the money. We do the servicing test. The servicing test is based on two things: how much rental income is coming and what is your employer contributing. What is your income in your bank account, how many credit cards you have, how many assets, liabilities you have, it does not matter. SMSF have their own borrowing power. Once the contracts are exchanged, loans approved, valuations done, loan settles, and everything happens through your superannuation, through your SMSF. Oh, okay, that's it. It's a simple process. We don't ask for your bank statements, we don't ask for your liabilities, we don't ask for your expenses. People who think it's a really hard process, it's not. It is pretty simple. If you think you don't have enough saving right now, you can't do much outside, explore the option of superannuation and buy property in super.
So the benefit of it is you don't have to pay taxes on that?
I'm not an accountant, but the tax is less in the superannuation, it's more outside.
Like, so when we are buying a property, for the example that you gave for 300,000, for 90,000, so we are still paying taxes as well? on
And
that?
you made taxes as in stamp duty?
No, the other taxes.
No, there is tax, definitely. It's less,
Yeah.
yeah.
If you don't have SMSF but have like a employer provided super, that does not work, right?
No, so you have to set up SMSF. So everybody have the super funds, everybody's employer set up. So you have to set up SMSF, and all the money from your account needs to be rolled over into that fund.
If
I'm
an
buying-
accountant can help you do that. And if
Yes,
accountant-
accounting. I can connect you to someone.
If I'm buying a property under a trust which is not SMSF, what are the lending rules over there? What do banks take? Why I'm asking this is I'm coming from a background wherein I hear many people, I own 50 properties, 60 properties, and people get maxed out pretty early.
Yeah.
Yep.
One thing they say is you set up trust right from the very beginning.
Yeah.
But then what I understand is those trusts also have to be cash flow positive in order to make another trust to get another property. So maybe I'll not make it that complicated. What is the lending criteria for a trust outside of
It is,
SMSF?
you're the guarantor, your income is being used. If you're buying a property under trust, one thing to remember is most of the lender will not do the negative gearing. Okay, so that means your borrowing is actually reducing. However, for the asset protection point of view, it is good to buy property in the trust.
Okay, and
So
every
your
time-
individual income as a guarantor is given to buy the property under trust. We're not talking about SMSF, trust
Yeah, I'm
outside.
talking
Yeah,
about trust only. Okay. So essentially same rules apply.
correct.
Okay.
You don't own the property, your trust does, but your same rules
But
apply.
see, I have a property which is cash flow positive under a trust, as opposed to a property which is in my personal name, it is also cash flow positive. How is my borrowing capacity different in these two cases?
It's not different, so we will put both incomes in the calculator and then calculate it that way.
Then how do they say that, if you're buying under trust, if it is cash flow positive, you can have
So
X
if,
number of
if your
trusts?
accountant is advising you to buy under different trusts, they're trying to save you tax. It's not, got
No,
nothing
it's
to do
not
with the
about
borrowing
tax,
capacity.
it's about borrowing capacity. They say that you have infinite borrowing capacity. If you are buying under a trust, different trust, and every trust is cash flow positive. So that's what I'm trying
Even
to
even if you
understand.
don't buy under trust, yeah, and it is cash flow positive, it is gonna increase your borrowing capacity
It will
eventually because it's
increase it.
positive.
It will increase it, but I can't buy a number of properties because at one point in time I'll max out. Maybe even if I'm buying cash flow positive, after 3-4, definitely I'll max out. But they say it is not the case it is not the case in
Some lenders, with some lenders, you can ignore those liabilities if you're just keeping it under the trust. As long as it's positive, you can say that those companies are working profitably, accountant letter is needed, and you can buy it outside.
No, that's what I was asking. So if I'm buying under a trust, property is cash flow positive.
Not
okay.
every lender, some lenders you can ignore that.
But then how is my lending criteria assessed differently by the bank?
I'm not getting your question.
Okay. Again, my basic premise here is if I want to buy n number of properties, if I buy in my individual name, even if these are cash flow positive, I'll max out after 3-4 properties.
Even that case you will max out.
No. That's okay. That my understanding is you won't max out. You can go till infinity. If every trust you have to set up trust. For every property you have to set up a trust. Every trust has to be cash flow positive, and then you can go till infinity.
Yeah, so that's what I'm talking about. With some lenders, if you have a property under the trust and that trust is running profitably, you can provide an accountant letter and you can ignore the liability.
Okay. Okay, so this means that my lending accessibility is
How-
different in case
However,
of a trust.
however, you cannot buy n number of properties at a point. Yes, it will run out.
No, because people, some of the people.
You
who
answer
have-
that?
Yeah, I'll try to answer
Okay.
here. First of all, there's a disclaimer because I don't know your situation, what it is. So it's a general advice, I'm already telling you. But in the trust, what happened, that you cannot hold the property under trust. It has to be a PTY LTD, a
Yeah.
company, okay?
Yeah.
Because you cannot get registered. That's one thing.
Yeah.
Second thing, the way it has been projected, she's also right, like there is a limit, but what does that mean? Because this is a different entity compared to yours. You actually, in nutshell, so it's not exactly, I'm trying to be as easy as possible. So actually, you as a guarantor giving a money to this is an individual thing, okay? This is not you as such. So if this PTY LTD, it's a legal person which is running the show. So what happens, why they say it has to be profitable, because it is money generating and it will be assessed, the loan thing will get assessed individually. So say for example, you have a property here which is earning 100,000. You cannot do it the negative gearing or something, anything for your individual taxation purpose. So this is individually you have to do the taxation and everything. Does that make sense? So what happened, this company, which is under trust and all, is earning 100,000. So it's his pure income. So based on that, the lender is going to assess as individually, and that's how you can increase the portfolio, if that makes sense.
Okay.
Yeah, so it has to be positive. So obviously, your income is getting more and more. It is not connected to you. You are just a guarantor, like a surety. So
Understood.
something goes wrong, then only it's gonna come back to you for that particular loan factor.
No,
Does
I
that
got
make
it.
sense?
I got your point.
Yeah.
Essentially, I understood. Yeah, you answered. it.
That's what it is,
Thanks
because
for
it's
that.
individual. It's
But,
different.
Yeah. So could it be done under SMSF also, or no? Or only one bear trust is allowed?
One
in
bear
SMSF?
trust, one property.
But subject to financial advisor, because that area is completely, because government doesn't want that, the super should be easily available for the people. It is a good asset to start with, the way she is explaining. But yes, they are very conservative, because if something goes wrong there, then that is your retirement things. So that is the reason there are so many compliances. It's not difficult probably, but the compliances
Yeah.
is like stronger compared to this area.
So like only one bear trust is allowed under SMSF?
No, you can have 5 bear trusts, but one bear trust will hold only one property.
No, that
If
I
you wanna
understand.
buy second property,
That I-
you open second bear trust and buy property in
So
that.
what I'm saying is under super, suppose say my borrowing capacity is, for example, 300K. For example, I buy one property under bear trust, company bear trust, same structure. This is positive cash flow. Going by the similar example, going by the similar parlance outside of SMSF, can I set up another bear trust, because this is cash flow positive?
Yeah, if the
bear trust company, and then
correct
simulate something, same thing under SMSF.
Yeah, the income will be calculated from the current property. It will be taken into consideration into the calculator. But you can't be like, okay, this bear trust is positive, let's just put it aside and then take another one. The borrowing capacity has to work in together because it's all under one super fund. However, it's a different trust. So it has to
Different trust
service.
and different company.
However, you do need to talk to your financial planner on that topic.
Yeah.
Okay.
Because there are so many loopholes, whatever she's saying and I'm saying, because you can't take it as advice, it is just the general information, yeah? And we are more than happy to catch up after this, and then, we can analyze individual case by case, and she can actually strategize.
I can connect you to a financial planner if you need to talk.
That's it.
So everything should be like, positive gearing, then only we can go for the next one, right?
No.
Nobody can.
No,
It's not like, I mean,
it shouldn't be positively gearing. You might be getting, your contribution could be 40,000 in the superannuation each year as compared to somebody have 20,000. And if with the contribution coming, if you are able to service next debt, you can take next property. Positive gearing helps definitely. You are not out of pocket.
Yeah.
For the tax thing, is it flat 15%?
I think so, but I don't want to make
It
any
is
comment.
flat.
I think
There's no
15.
flat.
It is 15%. Yeah. Any more questions? No? Thank you guys. Come see me.